Tom Lee is a writer to CNBC and the head of research at Fundstrat Global Advisors and the chief investment officer at Fundstrat Capital, among other jobs. He joins us now to talk about the markets. The first time we've seen him since the election. You were sure Trump would win. Yes, that's right. Not many people did. I'll give you that. Do you mean you didn't? You might not have used so many words, but it was clear what you meant. Yes, I would say that we gave a lot more weight to what the betting markets were telling us. And when we looked at all the deltas, we saw it in the Trump trade, Bitcoin, and market areas that would do better with Trump in office. So 500 points on the S&P right away. Will there be more, or are we already there? I believe we should honor this choice. I mean, it was a huge parade after the election, and it kept going yesterday. It really does show that a lot of money left the market because of the confusion surrounding the election. We now know that this will be good for Bitcoin, small caps, regional banks, and financials because of changes in policy and animal spirits. I still see a lot of good in it. 10 times the typical forward earnings is how much small caps are worth. Do you agree that it should be 12 times? What chance have you set your sights on? As it turns out, small caps have been trading at a higher P/E ratio than the S&P since 1987. The S&P is at 17 times, so I believe small caps will do much better than that over the next 2 years, beating it by more than 100%. There is a different amount of uncertainty when it comes to macro issues. The bond market and what it might mean keep coming up. What do you think will happen with gold? Will bond vigilance have a say in what you think will happen in Washington? Everyone is afraid of the bond market, as James Carville famously said. Watch out for this, but there have been times when both stocks and bonds went up. The reason yields have gone up, not because of inflation, but because people expect growth to change. I agree with Powell. If either party won, I thought it would be terrible for the markets and scary for everyone. We're getting a win now. Why doesn't it scare you more? It might have been scarier if the win went the other way. I think one reason investors are hopeful is that President Trump has more experience putting together a cabinet and a team than the last president. I think investors are hopeful because this could end up being better for the market in some ways. I agree that animal souls are getting stronger. He will never be in favor of deficits, will he? No, he will support deficits. If you do all of those things, cutting taxes, giving more money to Social Security over time, getting rid of the SALT cap, and continuing tax cuts, it's hard to fix the deficit with just changes in spending and taxes. But this is why Bitcoin is interesting. It could be used as a Treasury reserve asset, and as the value of Bitcoin grows, it could help pay off the deficit. Didn't you have $150,000 in Bitcoin? It is still possible to make 6 figures before the end of the year, and even more next year and the year after that, since Bitcoin is becoming more useful now that it has been halved and the legal burden is easing. The S&P by the end of the year, given the rally after the election, a dovish Fed, and normal seasonal patterns, 5 to 10% is expected between now and the end of the year. Is that the right thing for the Fed to do? I believe the main battle against inflation is over, but the real rate is still too high. That's why I agree with the Fed that we need to move toward stable, which is around 3% and is good for the markets. There has been less investment in businesses, so these are good signs. How about the year 2025? With another 5 to 10%, we'll be well over 6,000 by the end of the year. With 10 to 15% growth, we should be able to pass 6,700 next year thanks to stable earnings, a dovish Fed, and the fact that the election is over. You're a pretty optimistic person. Yes, I'm pretty sure about the basics of the US. What did you think of Amazon? Report is interesting. Cloud missed its goals, but making money was a big surprise and sales were good. Even though people are expecting a punishment, the price is going up. It hasn't been one of the best tech companies, so it has room to grow. They raised capital expenditures by 81% while margins grew, which is hard to do. Of course, cloud spenders spend a lot on capital expenditures, CAPEX. As Jassy continues to talk about the possibilities of AI, growth continues to pick up. This is good for Nvidia, which will be the last of the big tech companies to report. Thoughts on Apple quickly. Shares are down a little more than 1% after guidance. even though iPhone sales are good. Sure, Apple had a good run before the iPhone 16 and AI came out, but the features were a bit disappointing. It was better than expected that sales were okay. It's only down 1%, which isn't much, and there's still more to come with iPhone 16. Given how important it is to the market, does the forward P/E of 31 times mean buyers are becoming more picky about prices? As it stands, the price is just right, and any small mistake is met with a response. The news from yesterday wasn't bad, but it wasn't quite what people were hoping for either. People start moving around when they expect a market to grow quickly, but don't get as much as they thought they would. Right on. Since the market has already set the price, even a small miss, like a price that is slightly lower than expected, can cause a response. This is what we're seeing now, as the market gets close to all-time highs and the P/E ratio creeps into the mid-20s. More attention is paid to valuation by investors, which can cause short-term drops if growth expectations aren't met exactly. But in general, strong conditions that support earnings growth and things like the Fed's dovish stance are strong tailwinds. When prices are this close to all-time highs, there is a chance that some people will sell their stocks to make money. But this is also when investors look for chances to make money, especially in growth areas like tech and more. Assets like Bitcoin that are seen as a safety net against traditional financial uncertainty. As you already said, it's interesting to see how buyers are setting themselves up for what they think will be a good 2025 when it comes to long-term plays. More attention is being paid to sectors that haven't been well represented in portfolios, like small caps or tech names that haven't had huge recent runs-ups. This is because their valuations compared to expected earnings could allow for big gains. In general, there are strong structural supports in place, but investors will be more cautious and pay more attention to value, especially when it comes to the biggest names with high P/Es. With the rest of earnings season coming up and more information coming in on guidance, especially about what the Fed will do next and any new fiscal policies, these things will become very important to investors as they decide how to spend their capital going into 2025. To sum up, it's a mixed setting. Strong foundations and good policy factors are making people optimistic, but they are also keeping a closer eye on valuations. And small caps, financials, and digital assets could be the ones to gain the most if this cautious optimism keeps going. Since he also sold a lot of BYD, which they have owned since 2008, I believe David is correct when Freeberg says that the China issue might have had an effect. You know, there's a Chinese electric vehicle manufacturer, so that might have contributed. To tell the truth, I have no idea. Hold on, you're implying reliance on China? He might have thought that the portfolio as a whole had too much reliance on China, because both of those depend on it. Perhaps yes, that's something I could purchase. That makes a fair amount of sense. However, it's important to keep in mind that these choices have been considered for at least a few quarters. Recall that the letter he sends was drafted months and months ago. It wasn't written yesterday. Therefore, I believe that these choices were made some time ago. If we're going to play conspiracy theorists, another reason is that, Charlie Munger may be beginning to compile the book in preparation for the smooth transition to Greg Abel following Buffett's death. You're implying that he wants to transfer it with less risk when you say that? Therefore, there would be a risk associated with relying solely on one stock or China. In order to facilitate a smoother handoff, he wants to make it extremely tidy. He wishes to pass down a well-structured book, or perhaps